Hi, I'm Scott Wentworth, the founder and head writer of Wentworth Financial Communications. I recently had the opportunity to moderate a panel about sustainable and responsible investing and some of the challenges that it creates from a marketing and communication standpoint for asset managers. One of the panelists was John Hale, who is the head of sustainable investing research at Morningstar. I asked John where the surge in interest about sustainable and responsible investing has come from. Is it coming from the asset managers themselves? Is it coming from clients? Is it coming from other stakeholders? And John had a really interesting answer to that question. And he talked about how a lot of it has to do with the improvement in the sophistication of research around ESG factors. And he also talked about how companies themselves are much more interested in their sustainability profiles, and this translates into better information about those factors. Here are some highlights of what John had to say.
It is a little bit all of the above and maybe even something bigger than that. But first, I guess the first thing I would mention is that the idea of using ESG-related information, ESG criteria, that sort of thing, in an investment process has become much more sophisticated, partly because for a number of years, ESG research on companies, data on companies has become sophisticated enough to where asset managers can use it, right? So the argument was always like, okay, these are issues that sometimes can reveal risks that a company might be facing that's not altogether apparent yet in traditional financial analysis. So ESG provides a more complete way, a more holistic way to look at a company. And if it weren't for the development of the underlying kind of company level ESG data, which is not perfect by any stretch of the imagination, there's a lot of subjectivity to it and everything else, but but today I would say it's collected in a systematic kind of way that allows asset managers to use it in a reasonable way to integrate ESG into their investments. So that's just kind of something that's happened over the last 10 years especially. But then I think also there's, I guess the bigger picture thing is that, companies themselves, you see more and more interest from companies in what their sustainability profile is. And I just think, and I like to use the term even sustainable investing versus the others, because I think it connects to this broader idea of sustainability that's really becoming, I think, a pretty big thing in just society in general. People are using that term. To me, it's almost like a decision-making perspective that's sort of, it's long-term oriented. It says, I'm going to make my decision not just, solely and just by considering my own self-interest and nothing else. I'm going to consider the broader impact of it and the long-term impact of it. That's like sustainable decision-making in general, right? And so you apply that to investing, and all of a sudden you get like, yes, I want to be a long-term investor. I want to be an investor that appropriately takes account, other stakeholders that could be impacted by my decisions. I want to be somewhat cognizant of the actual impact of my investments. And so it all kind of comes together that. So I think companies are seeing themselves that way, and people that talking especially with millennials about what kind of companies they want to work for. I want to work for a sustainable company, one that has, a purpose and one that's, doing well along with doing good. It's just all out, it's an overall kind of ethos, I think, that's out there that's really overall is creating the demand for this in an investment.